So, ladies and gentlemen, welcome back again. This is Max. Thank you very much for taking the time to listen to my rantings. Today we're going to talk about chapter 2.3, The Creature is Hungry, and the creature in this case being the Federal Reserve and the central bank. Before we proceed, as usual, we do some housekeeping items here. The Amazon channel, please take a look. That's where you can find the book. The YouTube channel, still active. I haven't been closed down yet for some divine intervention. The Brighttown channel, please look, subscribe, give me a like if you don't mind. And the Rumble channel, as always. So, I'm aware that these chapters are very America-centric, but it has to be. Anybody who says, what does it matter what America does? My country is different. Whoever says something like that needs a lobotomy with a spoon. The US dollar is the reserve currency of the world, of which all other currencies are pegged against. What happens over there has a great impact on the world as a whole. So we need to talk about it, and talk about it deeply, as we are being taken for a ride. As I mentioned in the previous chapter, when the propaganda media mentioned panic's no longer feared, when they created the creature, history tells us differently, as we are now painfully aware of. We're all aware of the Great Depression of the 1930s. After the Wall Street crash of 1929, with the Dow Jones Industrial Average dropped from 381 to 198 over the course of 2 months, optimism did persist for some time. The stock market rose in early 1930, with the Dow returning to 294 pre-depression levels in April 1930, before steadily declining for years to a low of 41 in 1932. It was a long and painful depression that took decades to bring back the markets back to previous levels. The soaring 20s were a fantastic time for America. The industry was booming after World War I, and the stock market was hitting all-time highs. It was so good that even the common man started trading stocks, which turned out to be a big mistake. In 1929, everything changed. Markets were starting to show some weakness. Big investors started selling, and by October 29th, Black Tuesday, it all collapsed. President Hoover, at the time, took a hands-off approach, thinking that the market would correct itself on its own, but this never materialized. Hoover, not surprisingly, lasted for only one term, and handed off the hot potato to Roosevelt, who came after. The most dramatic step Roosevelt took, and this is why I focus on this one among many others, is his Executive Order 6102, signed on April 5th, 1933, forbidding the hoarding of gold coin, gold bullion, and gold certificates within the continental United States. The executive orders were made under the authority of the Trading with the Enemy Act of 1917, as amended by the Emergency Banking Act in March 1933. The government basically confiscated the population's gold assets. Mind you, they did pay fair market price for the bullion. But the backlash from the public was immense, and they accused them of acting against the Constitution, which they probably did. They paid the public $20.76 per ounce for the gold. In 1934, the Gold Reserve Act subsequently changed the statutory gold content of the US dollar from $20.67 to $35 an ounce. While this might be seen to some as a move that increased the value of gold, it actually merely devalued the US dollar so that less gold was required to back the US currency, and the Federal Reserve was free to print more paper money. But guess who got majestically screwed? The people. Again. This was a move by the Khazarian mafia bankers towards the final objective to take the US dollar completely off the gold standard, which I will now describe. At the end of the Second World War, there was literally no functioning global economy. So nations got together to create a new trading system and a new monetary system. That monetary system was devised in a town in New Hampshire called Bretton Woods. So it was called the Bretton Woods Agreement. One of the key elements was that the dollar would be pegged to gold at $35 an ounce. Other central banks could exchange the dollars they held for gold. In that sense, the dollar was as good as gold. Every other currency had a fixed exchange rate to the dollar. They established the dollar gold standard to create some predictability and stability for global commerce. For the next 25 years, it was a tremendous success. The dollar became the global currency. Everyone was happy to hold it, in large part because they could exchange it for gold if they had any doubts about its value. It was part of the phenomenal recovery from the war in Europe and Japan. It also created enormous economic prosperity in the US, all through the 50s and the 60s. When the Nixon administration came into office in 1969, they realized that the world economy had grown very, very big. Everybody wanted dollars, so the Federal Reserve was printing lots of it. As a result, there were 4 times as many dollars in circulation as there was gold in reserves. The rate of $35 an ounce for gold was good in 1944, but it hadn't changed. So by 1971, the dollar was really overvalued. That meant that imports were very cheap and exports were very expensive. They experienced the first trade deficit since the 19th century. They were experiencing employment problems. For the first time, the US started to talk about losing competitiveness. In the broadest sense, the US states couldn't uphold all of the responsibility that it inherited after the Second World War. For decades, the US was so predominant that it could help everybody. They lifted the world economy and didn't worry about the domestic economy because it was so strong. 1971 was the year the US began to understand the Marshall Plan was over and done with. On top of all that, there was the beginning of inflation. If it continued long enough, dollars would be worth less than they were before. The Nixon administration was afraid that other countries were going to ask for gold, and the US wouldn't have it. That would have been an enormous humiliation and a breaking of the commitment to exchange gold for dollars. What the US really wanted was some way to devalue the dollar. Because it was pegged to gold, the administration couldn't do that. In a move that is actually quite brilliant, Nixon sent his bulldog, Henry Kissinger, to Saudi Arabia, the world's leading oil producer at the time. Kissinger hammered out a deal with the Saudis that guaranteed the military protection against all its adversaries. But in exchange, Kissinger demanded that the Saudis would sell all their oil internationally and only accept US dollars in exchange. Thus, the infamous petrodollar was born. Gold was switched to oil in terms of backing of the US dollar currency, and nobody dared to argue. Nixon then made a surprise announcement to the world in August 1971 that the dollar would be unpegged from gold, as there was too much speculation in the gold market. This was an absolute lie. The reality was that the country did not have any gold. The printing presses really went into overdrive from this point on. And I will demonstrate that with a chart you will now see on your screen. If you look at this timeline here, we are talking years and years and years and years. You can see where the graph does the hockey stick move and goes up. It started in 1970 when they took the dollar off the gold. The second graph with the red line is the US national debt from 1900 to 2020. You see the arrow there, 1970, 1971, is when this excessive money printing started, and has never stopped. So basically, let's continue. Did you know that the Fort Knox, which supposedly holds the gold reserves, has never been audited since 1954? Here we have Fed Chair Greenspan, back in the day, explaining to us exactly what was going on. Let's do that.
What is the proper relationship, what should be the proper relationship between a chairman of the Fed and a president of the United States?
Well, first of all, the Federal Reserve is an independent agency, and that means basically that there is no other agency of government which can overrule actions that we take. So long as that is in place and there is no evidence that the administration or the Congress or anybody else is requesting that we do things other than what we think is the appropriate thing, then what the relationships are don't frankly matter. And I've had very good relationships with presidents.
So there you have it, straight out of the horse's mouth. He admits in public that the Federal Reserve is not a government entity, is not responsible to the president or the Constitution in any way, shape, or form. It's a very scary scenario, guys. So the petrodollar lives with us until this day, or almost. This agreement had just ended a few years ago, as the Saudis has made other arrangements, leaving the Americans high and dry. We will describe this in another chapter later on. The good is yet to come. If you go check Wikipedia and you look at all the economic crises since 1949, we have a long, long list. From the 40s, the 50s, the 60s, the 70s, the 80s, the 90s, and the 2000s. And it's accelerating in scope. The most recent in memory, of course, is the 2008 housing crash, or the mortgage crash, also called the subprime mortgage crash. This one is particularly interesting as it disclosed exactly how depraved these bankster psychopaths are. The real and true story about this crisis is accurately described in one of the greatest movies ever made, in my view. It's called The Big Short. If you've not seen it, it is an absolute must and should be mandatory viewing in every classroom, in my view, even if foul language is very present. This movie is absolutely spectacular. So what I described before looks like a long list of recessions and crises, doesn't it? But do you know what all these countries have in common? They all have a central bank. And they're all privately owned, not accountable to its governments, not allowed to be audited, and foremost owned in full by the Rothschild dynasty and their cronies, well hidden in the paperwork. With control like this, one could destroy countries and create recessions and currency collapses by the click of a mouse. And that's exactly what they're doing. The countries in red on the map are supposedly Syria, Russia, Iran, and Bolivia. Although I think it should be Venezuela, but I'm not exactly sure. We need to dig into that point one day. The point is that I am sure you are aware that unless you live under a rock, that is, that the last few years all these countries has been in the press and the media for all the wrong reasons. The reason for that is the vindictiveness of the Khazarian mafia bankers, especially against this arch enemy, Russia. The Putin bad story is obnoxious at this point, and the reason for this is that he kicked out the Rothschild Bank from the territory years ago. And for some mysterious reason, the economy turned around and they recovered very quickly, making them a superpower in less than a decade. Not to mention the recent sanctions and elimination from the SWIFT system, which has propelled them to one of the most powerful economies in the world. Not too bad for a backward tyrant psycho, if you ask me. So do we see a pattern emerging here? I do for sure. Now let's talk about devaluation of currencies and fiat money. The central banks, our lying media, and our politicians has us believe that it's all good and well in the economy. They've even gone so far as to change the literal definition of inflation to make us believe that it's not happening, although we see it every single day in the grocery stores. I still recall the day when Italy switched from the lira to the euro in 1999. The day after, I had a pizza that costed me 50% more. My rent was 50% more, but my salary, strangely, did not change. Everything changed that day. We were robbed. Thank you, Mario Draghi. Why are you still breathing? Please explain. Why are you still walking around and not in jail? The world reserve currency, the US dollar, has since the Federal Reserve was installed, like a toilet, lost approximately 98% of its purchasing power against gold. And this is not coincidence. Yet somehow it's still going strong. The stock markets are at all-time high, and all is good. I talk a lot about this in the last few years with friends, and I keep being told that a collapse will never occur. They will just print more and paper over it. Okay, sure. But when are we reaching the point when it's no longer sustainable? The worst ones with this argument are the bankers. They keep on saying, it's never going to happen in my lifetime. Why would I even worry? Well, they're not wrong because the system has always been working for them. Now, did you know? Well, I do worry. I do worry. And I have indeed looked at the numbers, and so has many, many other people. We all agree that we've reached the absolute breaking point in the currency creation. I refuse to call it money because it's not. I call it currency. And I will describe that now. Did you know that the BIS, the Bank of International Settlements, has recently reclassified gold as a Tier 1 asset? The only one except for the dollar. So gold is now classified as valuable in the US dollar in terms of international exchange. And it is indeed real money, the way it used to be. I then look at the fact that contrary to what we hear from the propaganda machine talking heads in the media, with their head up their ass, the central banks are purchasing gold hand over fist, but in a very, very silent manner. The numbers are staggering. Absolutely staggering. An idiot like me might ask, do they know something we don't? So let's just take a look at this little graph here, and we'll let it speak for itself. I rest my case. Gold is the top bar on top, at the 100 level. It's been solid and stable. All the other lines you see, they mark the yen, the Reichsmark, the dollar, the euro, the pound. Since 1900, they have lost 97 to 99% of its value against gold. And that's just in 100 years. It's pretty amazing, isn't it? Now, we end this puke fest of a chapter with an interesting little tidbit of information, namely the national debt. There's a beautiful website that maybe you're not aware of. It's called US Debt Clock. And it looks something like this. This site, as you can see, on the top left corner shows the debt ticking. When this book was written, it was $35.2 trillion. Now it's over 37 as of this recording. They're adding 1 trillion of debt every 100 days. And that is printed paper money backed by nothing. Okay? It is estimated that at this rate, it will become a monthly thing. 1 trillion a month. I'm just flabbergasted watching this site. It's incredible. Now let me put me in perspective for those who have problems with zeros. 1 trillion has 12 zeros behind it. A trillion is 1,000 billion, or 1 million millions. If $1 was a second in time on your clock, 1 million would be 12 days. 1 billion would be 31 years. 1 trillion is 31,688 years. That's a trillion. The United States of America are adding 31,600 years every 100 days. Okay? How is that for calculation? This is the world's reserve currency we're talking about here, guys. It's a scary concept. And these are the things that keep me looking at the ceiling when I'm in bed at night. How did we get to this? Who is responsible? Well, we now know. We know their name and addresses. Also, take a look at the unfunded liabilities in this picture. These are things such as welfare, etc. You find it on the bottom right. At a staggering 218.5 trillion US dollars. That's on top of the debt of 35 trillion something. The entire world economy is valued currently at $85.6 trillion. That is the world economy, okay, not the US. This is enough to make you sweat yet? It is absolutely staggering. Another little fun part of this debt clock is this little thing here, the dollar to silver ratio and the gold to silver ratio. This is something I very much like. It is showing the value per ounce of precious metals, gold and silver, measured in the amount on the ground available, mined basically, against the money supply. These numbers would be the real value of these commodities measured against the debt if we operated in an honest and transparent system. Look at these numbers. So, the silver should be $1,500. The gold at least $12,000. I'm hearing numbers that are even much, much higher than this, okay? So this would be if they would just reset the system today against the money supply. I'm taking all my bets on precious metals. At least I know I hold something that will buy something in the future. I don't trust numbers on a screen that will disappear once the banks decide the game is over. And in that case, good luck getting your money out, right? In the next chapter, I will explain how currencies come and goes, specifically for my banker friends who say this will never happen. This one is for you. Tick tock, tick tock, tick tock. That's all for me for today. I will see you in the next one. Chapter 2.4. The creature is terminally ill. The creature again being the Federal Reserve and central banking. So that's all. Max out and peace.